Hey there, iguanas. Iggy here from the Investing Iguana, your go-to source for all things investing in Singapore. Today, we're diving deep into the world of SingPost, a company that's been making waves in the local stock market. As a financial analyst, I've been keeping a close eye on this one, and I'm excited to share my insights with you. In this video, we'll explore SingPost's recent performance, analyze its future prospects, and uncover why this stock might just be the hidden gem you've been looking for. So grab a snack, get comfortable, and let's get started. First off, let's talk about the big picture. SingPost is riding the wave of the booming e-commerce sector in Singapore and the region. With more and more people shopping online, the demand for reliable courier services is skyrocketing. And guess what? SingPost is right there, ready to meet that demand head-on. But it's not just about the courier service. SingPost's freight forwarding business is also expected to perform well, thanks to the growing cross-border e-commerce volumes. It's like they've got their fingers in all the right pies. Now let's talk numbers. Analysts are projecting some serious growth for SingPost's earnings per share, EPS, in the coming years. We're talking double digits here, folks. And it's not just about the top line. SingPost has been working hard to optimize their costs and improve their operating leverage. This means that as their volumes grow, their profit margin should expand as well. In fact, analysts are projecting SingPost's EBIT margin to jump from 5.2% in FY 2022 to a whopping 7.5% by FY 2025. That's a big deal. But here's the kicker. Despite all this growth potential, SingPost is trading at a very attractive valuation. Their current price-to-earnings ratio for FY 2024 is just 16x, which is below their 10-year average. This means that investors are getting a great deal on a company with a bright future. And the analysts agree. They've given SingPost an ad rating with a target price of 77. That represents a 16% upside potential from where the stock is trading now. In other words, if you invest in SingPost today, you could be looking at some serious gains down the road. But don't just take my word for it. Let's take a closer look at what the experts are saying. According to a recent research update from S&P Global Ratings, SingPost's credit rating has been affirmed at BBB with a negative outlook. While this might sound concerning, it actually reflects SingPost's financial flexibility and ability to reduce its indebtedness. The report highlights that despite the challenges posed by the competitive logistics industry and potential sale of non-core assets, SingPost has credible options to improve its credit profile. Moreover, the latest analyst consensus on SingPost is overwhelmingly positive. The mean consensus rating is a strong buy, with an average target price of 62. This represents a significant upside potential of over 44% from the last closing price of 43. The highest price target among analysts is 63, while the lowest is 61. This narrow range indicates a strong agreement among analysts about SingPost's future prospects. But wait, there's more! SingPost recently announced its first quarter results, and the numbers are looking good. The company reported an operating profit of 24.4 million, a staggering 105.2% increase from the previous year. This impressive growth was driven by strong performances across all business segments, particularly in the e-commerce logistics division. Looking ahead, analysts remain bullish on SingPost's future. The consensus EPS forecast for FY 2025 is 2, representing a 25.78% increase from the previous year. Revenue is also expected to grow steadily, with projections reaching $235 million by FY 2027. These figures demonstrate the market's confidence in SingPost's ability to capitalize on the growing e-commerce trend and deliver sustainable growth. However, it's important to note that investing always comes with risks. While analyst forecasts and ratings provide valuable insights, they are not guarantees of future performance. As with any investment, it's crucial to conduct your own research, consider your risk tolerance, and make informed decisions based on your financial goals. In conclusion, SingPost presents a compelling investment opportunity for those looking to tap into the growth potential of the e-commerce logistics sector. With strong financial performance, positive analyst ratings, and attractive valuations, this stock is definitely worth keeping on your radar. But don't just take my word for it. Do your own due diligence, crunch the numbers, and see if SingPost aligns with your investment strategy. And if you found this video insightful and informative, be sure to smash that like button and subscribe to the Investing Iguana channel for more in-depth analysis and market updates. Your support means the world to me, and I promise to keep bringing you the best investing content out there. Thank you for watching, and as always, stay curious, stay informed, and keep investing like an iguana.